While everyone's fighting over the same overpriced tech stocks, the world's sharpest investors are quietly moving billions into a region most people have completely ignored. Latin America is having its moment. And if you're not paying attention, you're leaving serious money on the table. The Commodity Supercycle. Here's what's happening right now. Chile and Peru are producing record amounts of copper. Argentina is reforming its economy at breakneck speed. And commodity prices are surging because the entire world needs metals for electric vehicles, solar panels, and batteries. Latin American markets are leading global returns in 2026, and it's not even close. The iShares Latin America 40 ETF is already up over 6% this year. Companies like Vale, the Brazilian mining giant, and Petrobras, one of the world's largest oil producers, are printing cash. Argentina's YPF is benefiting from massive shale oil reserves in Patagonia. These aren't speculative bets. These are established companies riding a global commodity wave, the crypto revolution. But stocks are just part of the story. Latin America has become the world's fastest growing crypto market, and the reasons are surprisingly practical. In Argentina, where inflation has exceeded 100%, people aren't buying Bitcoin to get rich. They're buying stablecoins to protect their savings from a currency that loses value by the week. Brazil now accounts for 77% of all crypto activity in Latin America. Traditional banks like Itaú and fintech giants like Nubank are offering crypto services to millions of customers. Nearly 20% of Argentines own cryptocurrency, the highest rate in the region. This isn't speculation. It's financial survival. And where there's desperate demand, there's opportunity for early investors who understand these markets. The real estate boom. Now let's talk about real estate, where the numbers get really interesting. Mexico is expecting over $32 billion in real estate investment this year alone. Why? One word: nearshoring. As companies move manufacturing out of China, they're building factories and warehouses across northern Mexico at an unprecedented pace. Monterrey is constructing what will become the tallest building in Latin America. Industrial parks are expanding across Nuevo León and Baja California. Meanwhile, Colombia is projecting 7% annual growth in real estate through 2030. With rental yields between 9 and 15%. Compare that to the 3 or 4% you'd get in the United States. Government programs in Brazil, Mexico, and Colombia are funding roughly 2 million housing units by 2026. That's $100 billion in construction value. For foreign investors, currency depreciation in Colombia actually makes properties cheaper, while rental income stays strong. The smart play. So what's the smart play here? Diversification across all three asset classes. A Latin America ETF gives you exposure to the commodity boom without picking individual stocks. Stablecoin platforms operating in Brazil and Argentina are capturing massive user growth. And real estate in Mexican industrial zones or Colombian cities offers yields that simply don't exist in developed markets anymore. The window won't stay open forever. As more institutional money flows in, prices will adjust. But right now, Latin America offers something rare: growth potential with real fundamentals backing it up. Not hype, not speculation. Just solid economics meeting undervalued assets. The question isn't whether Latin America will keep growing. It's whether you'll be positioned to benefit when it does.